Hi traders, and welcome to my video on the dark cloud cover candlestick pattern. In this video, if you stick around, I'm going to show you how you can use this candlestick formation to capture moves such as this one for over 700 pips. Now this is a very rare candlestick formation. You can find it on any traded instrument, any chart time frame. I prefer to trade the higher chart time frame simply because they contain more price data, and therefore I find candlestick patterns more reliable. This is a Euro, Yen, EJ daily chart on the MT4 trading platform. You can spot these candlestick formations on any trading platform. So basically what we're looking for is a bullish candle. So a green candle, according to how my charts are set up, followed by a red candle, okay? And what we're looking for is a gap between the close of the bullish candle and the open of the red candle, okay? As you can see here, this is the bullish candle, this is the bearish candle, and there's a gap between the close of the bullish, okay, and the opening of the bearish. So that gap is what we're looking for. And then we're going to look for the bearish candle to close at least 50% below the body of the bullish candle. And that's the dark cloud cover there. That's where the name comes from, because it's a dark cloud. The bearish candle is a dark cloud covering the bullish candle. So this is a signal for a reversal to the downside. So what do you do once you see this candle? Well, you don't do anything straight away, or I wouldn't. What I do is first look at the market, and I'm going to look to make sure it's a good time to sell. So here we can see we've got lower highs, so there is a downtrend. Okay, so that would be my first confirmation. See this level of resistance tested there, eventually became support here. So that would be the first step. Okay, and I'm going to look for an area of support to trade a breakout of. And the classic way to trade this pattern would be to place an entry below the low of the previous candle, okay, for a breakout. So if you're using the bodies, it would be there, and you could trade this breakout here, or if you're using wicks, the candle wicks, it would be there. Either way, both good entries to capture this downwards momentum here. Okay, so it's as simple as that. I'm using an indicator that I found online, which was free, that identifies these candlestick formations, because it can be quite easy to see if the candles actually have a gap or not, or just take you forever. With an indicator like this, you can just slap it on the chart and it will show you where the dark cloud cover candlestick patterns are. Okay, so an entry, that would be the traditional entry, which is a breakout below there. As you can see, that actually held up as a good support level on the following candle. Okay, it was support there. So we could have entered on the breakout below there, and that would have been a good entry for almost 700 pips. Okay, that's assuming you pick the low, and nobody's going to surely know that to exit here. However, once we see this spinning top candlestick formation, okay, followed by this bullish candle, this is bullish signals that perhaps it's time to exit this position. What you could have done as well is on the way down, you could have trailed price. So say we entered on this breakout here, we could have had our initial stop loss above the high of the dark cloud candlestick pattern there. Then as price dropped, we could have just moved our stop loss above the highs. Okay, and just locked in the profit on the way down, even closing part of the position just to bank some pips. Okay, what you wouldn't want to do, what I wouldn't do, is just to enter the breakout there and leave my stop loss in his original place, wait for price to turn back and let this big winning trade turn into a losing one. Okay, so I'd lock in profit, at least a break even as soon as possible, and I'm trying to maximize the move with a trailing stop. Okay, keep an eye out for other candlestick patterns as well, just to give you extra confirmation. As always, draw your support and resistance lines. Okay, probably look in here somewhere. So just to keep an eye on what's happening with pricing in around your trades, you have a nice bearish pin bar formation here. You can see that the bulls tried to push the market. There was indecision with this candle, spinning top, okay? Bulls came out on top following that. And the bulls tried to push the market up again, okay? But the bears succeeded in pushing them back down. We have this pin bar here with a long upper wick. So signified some potential bearish action. Again, have our lower highs, lower high here. So this is all good. These are all good indicators. If you didn't take the initial breakout, you could have waited for the breakout, the pullback. As I said, come back to this level of support that actually became resistance here. Price closed below, and then you can see from that big downwards candle there. Could have been a good entry point. It's actually a nice wedge formation formed here as well, just for extra confirmation. Do have videos on wedge patterns and various other candlestick patterns and price action analysis you can do. As you can see, we don't need no lagging technical indicators for this. I mean, I personally prefer price action just because it tells you exactly what the charts are doing at any given time, not relying on any kind of unicorn magic crystal ball, indicator. I prefer just to draw trend lines, support and resistance, and be aware of the various candlestick patterns. If we take back this level here that we were using for the dark cloud cover entry, you can actually see that it was a strong resistance level as far back as here. Okay, so that's that would have given us extra impetus to take this trade either here on the breakout of the dark cloud cover candlestick pattern, or even on the pullback here. Okay, so there's many opportunities to get in on this move. What I wouldn't have done is bought down here, just because you're gonna risk buying at the low after a big drop like that. You're gonna probably get caught in a bear trap. Okay, a bear trap is basically where there's a strong downwards trend and traders get excited, thinking they're going to jump in on it and get some of the action, but they get in too late. Then they get trapped. Their stop losses get hit. As you can see from these big candles here. Okay, so these people buying, they're seeing this downwards momentum and they're selling, getting excited, selling, still selling here, trying to push down. And as price goes up, their stop losses are triggered. It causes that extra momentum shift, and all the bears get caught in the bear trap. And the price shoots upwards, as you see here. I do have a video on the bear trap strategy. Very interesting and simple strategy to apply. The bears here were successful, in my opinion, were the ones who were watching this up here, looking at the longer overall picture of the lower highs and the support and resistance, importantly. And yeah, time and entry. So you would have wanted to get in around here somewhere. Arguably on the pullback here as well. So we had this little pullback continuation. Arguably here, I mean, this is a daily chart, so you would have saw that this line here that I just drew would have perhaps been more significant a level of support on the intraday chart, such as the 1 hour, 15 minute, 4 hour charts as well. You can always go to lower chart timeframes to hone your entry in earlier if you want. I'm even seeing here, this was a good level of support. You can see it's tested multiple times. And we had the breakout and it held up as a resistance level as well. So you could have always entered on that pullback or on the breakout down here. There's many ways you could have got in here. As always, good money management. Make sure you've got tight stop loss. I like to cut losing trades short and let winning trades run. So when we capture a big trend like this, we can maximize profits as much as possible. Okay, hopefully that's covered the dark cloud candlestick pattern for you. I do have an opposite of this signal for bullish markets, which is the Pearson candlestick pattern, which I'm going to cover in another video. Check that out. Please like and subscribe. It really helps the channel. Thanks for watching, and I will catch you on the next one.